Welcome to Markets Now. I'm Michelle Rook along with Ken Beadle with Paradigm Futures. Grain still mostly higher with the exception of old crop corn. We've got soybean meal a little bit lower over in the livestock futures. You do have cattle setting back. Hogs are trying to hold some gains here except for the April. Some of the outside markets like crude oil is on a big rally here today. Kent, let's talk about the grain sector first. Soybeans, new crop and old crop soybeans got a pretty good push on bullish information out of the report on Friday. How much more do you think we need to go up here to price all that in, or have we priced it in now?
Oh, I don't think it's fully priced in. One of the things that we have to look at is the USDA coming out here in another week and a half with the balance sheet that's going to incorporate that smaller stocks number. And that's going to tighten up old crop soybean ending stocks significantly if that gap in the average trade estimate relative to actual stocks ends up flowing into the balance sheet somehow. Keep in mind, we were at 210 million bushels on the last S&D. I can't imagine that they're going to take all of that into the balance sheet and put us down at 160, but they're going to have to do something. We're probably slightly sub 200 now at a minimum, and that feels to me like 15 and a quarter to 1550, where that old resistance was, is a place that we should probably get to.
Okay, yeah, that was the old high here from last month, so maybe we'll get up to that area. Let's talk about corn then as well, because the quarterly stocks were bullish, but the acreage estimate was a little bit bearish. And so what do you see going forward here for that market? And does the market actually believe we're going to get 92 million acres of corn planted, especially with what we're seeing for snowpack and another blizzard up in the north?
Yeah, that's what's going to be very interesting. The total number of acres that the USDA allocated to all crops at a little over 318 million is sort of a standard number that they like to use, but it's on the high side of recent history. And, given urban sprawl and additional acres into CRP, I think it's an optimistic estimate. If you add to that the snowpack, as you referred to, in South Dakota, North Dakota, Western Minnesota, and up into the Red River Valley, it's going to be slow, and there is a heightened possibility of prevent plant acres up in that area. Our look at the weather forecasts say that not only are we going to get snow and a fairly significant blizzard as early as tomorrow, but then again on the 13th, 14th of April, there's another system bringing more snow. And then unfortunately, what we see is a large shift in the temperature pattern to something that is significantly warmer up in that area. And if we have a rapid snow melt of all of this snow that we have in the snowpack, and then what we're going to get in these next two systems, the possibility of flooding in the Red River Valley and parts of the Dakotas is certainly heightened. And that's what really brings prevent plant into play, is if you start getting millions of flooded acres up there.
So what's your best estimate here early on about prevent plant? I think we had 5.3 million acres last year. Will we be above that mark this year? Where do you think we'll be?
I think that's a reasonable number right now. I mean, truly, it's hard to say, and how this weather ultimately develops, and how warm does it get, and how fast does the snow melt? Is there any residual impact in the Mississippi area as well, because of the amount of snow that we've had in Minnesota over the last weekend? All of those things could play into it. I think 5 million acres is a reasonable number. And frankly, I think that it's very possible that when all is said and done, we're going to end up with a corn acreage number just south of 90 million acres as opposed to 92 million.
Yeah, no doubt. You got to wonder how many of those acres are going to get planted. And like you said, how much prevent plant there's actually going to be in those areas. So with that being said, are you pricing corn? Are you telling folks to price new crop corn when you get above the $6 mark, or where are you making sales here?
Well, we're probably going to add to some sales that we've already made as we approach and or exceed the 610 area. There's an awful strong seasonal regarding the January high, which was 611. We've exceeded that 31 of the last 33 years, and I think that there's a good chance that that happens again. However, we do have good profitability here, and that's the main conversation that we have with all of our growers is, where is their comfort level? Would they like to get a little bit further ahead in their marketing with the rally that we've already had? It's pretty shallow at this point. We've only come up about 20, 25 cents. I think the next 25 cents is possible, but it's probably going to take a little more work than this first 25 did as the shorts in the marketplace start to cover.
Yeah. And as bullish as the quarterly stocks were for old crop corn, we are seeing the bear spreads or unwinding of bull spreads here today. And is that just a function of the export inspections, or what do you think?
Partially the export inspections. We need to average about 1.25 million bushels, million metric tons per week in order to hit the USDA estimate. But I also think that, given the size of the rally in old crop that we've had, and then a higher trade earlier today, plus the inverse in the market, which was pushing out to 24, 25 cents a bushel at its high, that's an awful lot of incentive for growers to take a look at their old crop situation, maybe get some basis priced, make sure that they're not carrying grain through that big inverse. And I think, with the rally that we've seen here over the last couple of weeks, and then certainly the strength we've had the last 2 days, it's been grain movement from the farmer that probably weighed on the make today.
Okay, that makes sense. It's just interesting to see when you've got crude oil screaming higher by at times over $5 here in the market. So what do you think there? We're gearing up for the first national ratings today. Do you think that the market is anticipating that? Is that why we're up, or what do you think?
Well, there just isn't rain in the forecast for the next 15 days, other than small little probabilities at various points over the course of the next 2 weeks. But, we expect crop conditions to be generally steady to lower, and they're already quite poor. If this is what the market wants to trade, in addition to the lack of ability to get spring wheat planted in the north, all of these things kind of work together to give some support to the wheat market. I would like to see exports do a little better. We did not have a good week of export inspections again. That number's been yo-yoing back and forth, but it needs to average about 450,000 tons a week in order to hit the USDA estimate, and we really haven't been close as of late.
Okay, so we're putting in some weather premium, and we don't have a lot in there yet, so that'll be interesting. Plus, like you say, not only are we looking at maybe delayed plantings of spring wheat, I think the acreage number was a 50-year low on Friday, so the market probably is still digesting that.
Yeah.
Let's move over to the cattle market. Some new contract highs in live cattle early on. Now we're a bit lower. Is this just typical profit taking and consolidation here until we get cash trade news to get us back up there in those areas?
Well, I think so. I mean, obviously, it was a huge week last week and a very good technical close, and we did see the new highs early in the session. But we do have to kind of keep in mind that the market's going to be worried a little bit about the economic situation, and to be fair, if we are going to have higher gas prices very soon, that takes some money out of the consumer's pocket, and I think maybe that plus a little bit of hedge selling is what got into the cattle market here this morning.
Yeah, hedge selling, that's a really good point that you make, because at these levels, definitely if you get another black swan event like more bank crisis collapse, that certainly is a good point. What about the hog market? Of course, we have been kind of trying to still digest the hogs and pigs report numbers with the upfront supply still very burdensome, but maybe a little bit of light at the end of the tunnel for the back months. And so we've been bear spreading. Do you continue to see maybe some of that, or are we going to see some short covering since the funds are so darn short in this market?
Well, I think that the short covering is going to get triggered by stronger cash when stronger cash emerges. It hasn't happened yet.
Okay.
And until it does, we're likely going to chop around and stay somewhat soft here in this mid $70 per hundredweight area on the April contract. Ultimately, seasonals do tend to kick in, and as you say, things do look a little bit better out in the deferred part of the curve. With ASF, by all reports, taking a larger hold in China, it suggests that they are going to have to come to the trough with some imports sometime soon, and that's going to help the back end of our marketplace. While they're liquidating the herd out in order to try to keep the disease under control, that puts more tonnage on the market on the front end, and that's certainly one of the issues that the hog market has had to deal with. Obviously, in addition to the additional numbers that we saw in the revisions on the hogs and pigs report at the end of last week.
Yeah, absolutely. Well, with the funds so short, let's see if we get a good short covering pop out of this or not. All right. Thanks for joining us, Kent Beadle with Paradigm Futures. That's Markets Now.